Good morning, traders. I hope we all had a fantastic weekend. My name's Aaron Hill, and welcome to another segment of Technical Talk. So today is Monday, the 11th of April, and time is now 8:44, 8:43 GMT plus 1. Okay, so before we kick things over to the charts, I want to run through a few market-related things I'm watching right now. Of course, it's election time in France. Current President Emmanuel Macron is set to face a rival, Marine Le Pen, in a rerun of their 2017 contest. In the final stage of the presidential election on April 24th, after they beat other candidates in the first round of voting on Sunday. So for me personally, euro-based currency pairs are likely to be affected in the run-up to the final stages. So do keep a close eye on these markets. Something else I thought was noteworthy was Elon Musk has decided not to join Twitter's board after the Tesla CEO bought up around 9% of Twitter last week. Since becoming the largest shareholder in the social media giant, Musk has aired potential changes, such as adding an edit button. Personally, I cannot see any reason why an edit function has yet to be made available. So, for me especially, this would be a good addition. So look over to the markets right now. As you can see in European equity cash markets, right now we are largely higher across the board, and this has seen, aside from the FTSE 100 out of the UK and Germany's DAX, we are higher across the board. So the FTSE 100 is down by 0.2%. The DAX 40 is down by 0.2%. France's CAC 40 is up by 0.6%, and the Euro Stoxx is currently unchanged. Now, in terms of US equity index futures, we are modestly lower across the board right now. The Dow Jones futures is down by 0.1%. The same for S&P 500 futures, and of course NASDAQ 100 futures is down 0.2%. Now, in terms of major currency markets, we are seeing some considerable movement in. We have seen some considerable movement in early trading. As you can see, dollar yen is up by 0.7% after, I believe, cracking the 125 handle. Euro dollar is up by 0.3%. So euro dollar, dollar yen, as well as dollar CAD are notable outperformers in current trading. As you can see, the laggards right now are the Aussie dollar, the pound dollar, and of course the New Zealand dollar against the US dollar. In terms of the crypto market, just bear with me, the crypto market. So we are seeing a bearish vibe right now. Bitcoin, it currently trades at 42,308. It's down by 0.8%. Ethereum against the dollar is down 2%. Litecoin against the dollar is down by 2.5%, and the same for Ripple against the dollar. Now, in terms of key events for this holiday shortened week, well, I am looking at the UK and US economic events. So US CPI figures, which comes out on Tuesday, is a keynote. And as I'm sure you're aware, US CPI figures are at a 4-decade high. So it will obviously be a key watch this week. Year on year, we are expecting an 8.5% increase, and that comes following the 7.9% print for last month, for the previous month, excuse me. So in terms of UK CPI, that's on Wednesday at 7 a.m. GMT plus 1, guys. For the year-on-year expectation, we are looking at a 6.7% increase, and that follows the previous print of 6.2%. Now, for the month-on-month number, we are expecting a 0.7% release, and that follows the previous month's 0.8% print. Another key note, of course, is the European Central Bank on European Central Bank's decision on Wednesday, I thought it was. I'm just trying to see if it's, I can see it on the calendar. Just bear with me. Excuse me, on Thursday. So the European the European Central Bank on Thursday, it is expected that the ECB will stand pat on current policy, given the uncertainty surrounding the Ukraine-Russia conflict. Now, in terms of Thursday, we also have Aussie employment change and unemployment figures. As you can see, the unemployment rate is set to tick lower to 3.9%, while the employment change is set to come in at 40,000. Right, so that's really it, because on Friday, of course, we have Good Friday across most of the European banks, including also, as you can see, Australia, Canada, and New Zealand. So this will likely be a very, very quiet day in the financial markets. Right, okay, moving over to the charts, just bear with me. Right, so in terms of the euro dollar, now, as you can see here, the euro dollar, this is the H1 timeframe. Let me just remove my crosshairs. As you can see, the euro did initially gap higher at in Asia to around 0.9 to around the high of 0.920. And this is on the view that I believe the view that the current president Macron did a little better than expected in the first round of the presidential election. But both, as I'm sure you're aware, but both Macron and Le Pen increased their vote shares and and it looks to be a relatively tight runoff, a runoff vote on April 24th. Anyway, back to the charts. So look, longer term interest will likely be focused on this weekly Quasimodo support at 0.778. This is the weekly time frame. So as you can see, we have reacted from resistance at 11.74. This was a level I did highlight in previous market reports, as given this market is in a considerable downtrend, it has been since 08. Okay, this is a very, very long-term trend, but we are lower, and I guess we could say we have been ranging since around March of 2015, and I would agree. But overall, we are lower, and the current trading is emphasizing that. We have had a trendline support breach, and we're also locked within this descending channel right now. So a retest of the underside seen from 11.74 was pretty obvious to most technicians, especially price action traders. Anyway, as you can see, 0.778 on the weekly time frame is a downside objective I will be watching closely, alongside this weekly channel support taken from the low 11.86. So the convergence of this area may draw in buying, profit taking, or counter trend interest. Now, in terms of the daily time frame, as you can see, we have bounced from this daily decision area, daily decision point zone at 0.788, 0.854. We formed a, dare I say it, a hammer candlestick pattern from this area and have held higher so far on Monday. Will this be enough to get the euro back up to around this area? I don't think so personally, but we could see some short-term buying interest come in on the basis of this reaction. Because ultimately I am looking at this 0.778 level on the weekly time frame, which is fixed just under this decision point. So I do eventually expect this decision point to give way. Anyway, onto the H4 time frame. As you can see, we do have a trend line resistance turn support, providing a floor right now, albeit not anything to write home about or get excited about, but we do have a floor from this trendline resistance turn support. Now, to the upside, we do have a decision point at 0.990, 0.963 on the H4 timeframe. This is a key area for me and could be tested should As we can see here, we are reacting from this decision point on the daily time frame. This could be tested within the next few days. Now, in recent hours, in recent minutes, we have seen the H1 pop back above the 109 figure. Now, we do have resistances on the H1 time frame between 0.950 and 0.931. Now, I do anticipate that we will test these areas, but I do believe that they will give way for this H4 decision point. And this, for me, is where I believe sellers are likely to be drawn towards, largely because of its construction. It was a key decision point in this market, and a key decision point that broke all of these lows here. And yes, so this is where I believe sellers will be drawn to going forward, in line with the overall trend, until and the reaction from here is likely to be enough to target this weekly Quasimodo support again at 0.778. Onto the Aussie dollar. Now, guys, you may remember that I highlighted this prime resistance at 78.49, 75.99 on the weekly time frame. The reason why I really, really like this prime resistance was quite simply because of where we are in the overall trend. So we are, as you can see, we have constructed a series of lower lows, lower highs, lower lows, lower highs. And okay, this is a very, very long-term trend, but this strong move we saw from pandemic lows of March 2020 would have likely caught the attention of trend traders, of course, and believing that the market is likely headed higher. And look, it could still be that. It could still be the case, of course. But for me, longer term, we are lower, and this pull, I believe it's a pullback. This is a strong pullback. So this correction here to this area here, for me, is not a dip buying opportunity. It's more of a sell-on rally scenario from this move here. Okay, so this for me is a sell-on rally scenario. As you can see, we have reacted from the prime resistance, and we formed what's known as a shooting star candlestick formation, a bearish signal. Now, with that being said, should we continue lower? I do have prime support at 69.48, 72.42 to the downside, with a break of this area potentially targeting the weekly support at 66.73. Now, you may also remember that I highlighted the pattern profit objective at 76.60, and this comes from the double bottom pattern around the, let's say, around the 0.70 area. As you can see, we did test this, but we did test this pattern profit objective, you know, almost to the pip, and we reacted nicely. But it was aided technically by 100% Fibonacci projection. As you can see, the Fibonacci projection is a 3-point structure: 0.1, 0.2, 0.3. And this also forms what's known as an AB equals CD formation. So as you can see, we have reacted from this area, and we are now approaching, just bear with me, the 38.2% Fibonacci retracement at 73.97. Now, for anyone that follows harmonics, in particular Scott Carney, who is a solid is someone I would recommend for education in terms of harmonic patterns. Anyway, he states in his books that the 38.2% and the 61.8% Fibonacci retracement ratios from point A to point D are generally the downside profit objectives. Now, as you can see, we are, so look, just to confirm, the 38.2% is generally where you'll see traders reduce risk to break even and potentially take some money off the table. And as you can see, we are on the doorstep of this level alongside this trend line resistance turn support. So this is a key area for me going forward in this week. And should we test this area, I do expect some form of reaction. Although we are coming from weekly prime resistance, I do expect some bullish interest to form from here. Should we break below here, then I am going to be watching the 200-day simple moving average, currently trading at 72.95. This will be with a break of this area, of course, followed up by the 61.8%. Fibonacci retracement ratio currently at not currently, it's fixed at 72.25, I would say 72.25. So this is where I am on the bigger picture for the Aussie US dollar. Now, in terms of the shorter term charts, this is the H4, this is the H1. We have broken below support at 74.51 on the H4 timeframe. Now, this is key for me because this confirms the weekly timeframe's position and also confirms we are likely headed lower on the daily timeframe, which, as we can see, is the current projection in terms of the chart studies. For downside objectives on the H4 timeframe, however, we are looking at 73.49, a Quasimodo resistance turn support. So we could see price potentially dip as far south as this the 73.50-ish range this week. Now, from the H1 timeframe, what I did note in my weekly technical market briefing, I was looking at price potentially breaking this resistance at 74.67. Why? It's because of this round number, 75, this psychological figure, which is going to be widely watched in this market. So if price pulls back, engulfs this resistance and tests this round number, the prime resistance at 75.09, 75.27 is in a prime location to facilitate what's known as a stop run. I've seen it countless times. I've traded these countless times. And what happens generally is price will approach this round number. What happens is, as I'm sure most of us are aware, round numbers do attract attention in the markets. They attract attention, and by extension, they attract orders. So with that being said, you will get traders attempting to fade this round number, with their stops above the round number. Okay, with that being said, once price breaks above this round number, you will also get breakout buyers into the market. So with that being said, we all have all this buying pressure above here. So with the larger players requiring liquidity to sell or buy, they may, it's not a guarantee, of course, in trading, but they may sell into all of this buy upside momentum derived from the stops taken above this round number. So they could sell from this prime resistance. Of course, there is the possibility we could also spike to this prime resistance at 75.61, 75.40 to ensure that all the stops are taken out above this area. So between these two areas are, for me, they are high probability areas of resistance. Now, of course, that's assuming we do get that high, because as you know, on the bigger picture, we are looking at lower prices with a downside target of around 73.97-ish right now. Okay, onto the dollar yen. Look, the dollar yen, as I've already said, is currently up by 0.8% now. Currently up by 0.8%. We are testing daily Quasimodo resistance at 125.11, and we are within reaching distance of the, as you can see, the 1st of June high of 2015 at 125.86. Now, between 125.86 and 125.11, I do expect some resistance to form. Why do I believe that? Is because we have rushed above this round number on the 125 on the H1. And again, breakout buyers have likely jumped on board with this. And why not? Because the trend is clearly higher, right? This would be a breakout buyers' setup. So we have breakout buyers coming in here. So it just makes sense for me for short-term sellers, short-term players to fade this upside momentum for a short-term gain to the downside. So that's really what I'm looking at on the dollar yen. There's nothing really else. Oh, I do want to mention the RSI, because the RSI is within overbought territory, as you can see, and we did react off of an area, a considerable resistance area that I just want to point this out, an area that hasn't been tested since 2014, and of course at 2013. So once price reached that area of resistance, as you can see, once the indicator reached that area of resistance, we did see the indicator pull back. But we are in a clear uptrend on the daily time frame, right? We are above the 200-day. We have been above the 200-day simple moving average since February of 2021. So with that being said, the RSI can remain within overbought territory for a considerable period, for prolonged periods, right? And any breakout to the downside from the overbought threshold may be a false signal. So just be aware of this if you're trading the dollar yen and looking for counter trend opportunities. Okay, finally on to the pound dollar. Now, for anyone that's followed my market analysis, you will remember I did highlight the prime resistance on the weekly time frame. As you can see at 34.73, 32.03. So given this area, let me just remove my crosshairs again. Just given this area is in play alongside, in addition to the trend direction facing southbound since 07, excuse me. I don't believe this is a correction. This is a dip buying correction. I believe this is a potential continuation to the downside, at least until we reach this support on the weekly time frame at 27.19. As you can see, we have held the retest at the underside of this prime resistance, and we did form a half-hearted shooting star bearish candlestick formation. So as you can see, we do have room to move lower on the weekly time frame. In addition to this, on the daily time frame, we cracked below support at 30.82, and which is now a marked resistance. And we do not see anything really stopping this market from navigating lower until around the 28.62 support, which aligns nicely with a descending channel support area as well. Now, in terms of the lower time frame charts, my initial thoughts are with this decision point on the H1 time frame at 30.54, 30.40. As you can see, price did come within touching distance of the area, but has yet to officially test it. We have just recently bounced from the widely watched 130 figure, as you can see, which is complemented by a 100% Fibonacci projection at 29.85, which is actually an AB equals CD bullish formation to the downside. Now, should we test this area? I do expect some active sellers to be present, and the reason being is because we also have H4 resistance at 30.51 present within the area. And we are trending lower. There is a clear bearish vibe within this market. However, if we do break above this decision point and we crack above the 30.74 level, I believe there's consumed supply within this area and very little stopping the market from reaching the 131 figure. And this is where I believe sellers may attempt to come in again within this market. Now, that's a wrap from my side, guys. So thanks for taking the time out of your day to join me. As usual, questions or comments can be directed towards either support@fpmarkets.com or alternatively directly to the research team at Markets Analyst at fpmarkets.com. Have a wonderful week ahead, and I'll catch you all on Monday morning next week. Thank you so much.